Ladies and gentlemen, boys and girls, thanks for tuning in to another episode of Crypto Hot Seat. Today we're going to talk not only about Mr. Ric Edelman, we're going to talk to Mr. Ric Edelman. He is the host of a bunch of financial radio shows. He has written 10 books with an 11th coming out in May. He's here to talk to us today about crypto and finance at large. Rick, thanks for joining us on the show.
Oh, it's my pleasure, Dylan. Thanks so much.
There's a lot to cover under this big umbrella of crypto and finance, but I thought, I hope you don't mind me asking kind of an offbeat question to begin with. As I was reading up on your past, you went into business with your wife in 1986. Is that right?
Yeah, we started a financial planning firm, small little business for the two of us. Our goal was to provide financial advice to people who normally don't get access to it. You know, Wall Street is filled with advisors who are ready and able and willing to serve rich people, help rich people get richer. And that's fun and that's important, but there are so many millions of Americans who aren't wealthy, who don't have access to the expertise that the Wall Street privileged get. And so we devoted our practice to serving the millions of American families who need the advice, need the help, and who are denied it pretty much everywhere else.
Did you have any, were you at all leery about going into business with someone as close to you as your wife, or was that an easy decision?
It was second nature to me because I grew up in an entrepreneurial household. My parents owned a small business, so my mom and dad worked together. And so to me, it was extraordinarily natural. I think it was harder for Jean because she had a traditional Ozzie and Harriet family. You know, her father was a corporate executive in New York. Mom was a stay-at-home mom raising 4 children. And so I think it was a little more challenging to Jean, but she's a corporate exec in her own right and brilliant, talented, capable executive. And so it wasn't hard. And we had a very clear demarcation of duties. I was the rainmaker. I was the one building the business, client contact, all that kind of good stuff, the design, the strategy, et cetera. Jean was the back office. Jean was, the operations center. In other words, the way we phrased it, I created the problems and Jean solved them. So we knew whose job was what, and I, heaven forbid, I got anywhere onto Jean's turf of how to get stuff done, because she's the detail person and knows all those intricacies.
Gotcha. Could you talk to us a little bit about how this media thing began for you? Was it radio first, or did you do a book first? How did media begin for you and financial advice out there?
Yeah, it was actually seminar first. Again, our premise was we want to help people who don't have access to help in personal finance. And so we realized that helping one person at a time, although that's impactful and important, we're not going to solve society's problems with 300 million Americans, one person at a time. And so we realized we need to get this content, this information, this advice, this education out there as broadly as we can. And we began by doing seminars. Our first round of seminars when we started in 1986 were college planning seminars. Today, that's ubiquitous. Everybody knows the need to save for college. But nobody knew this back in the 1980s. Nobody had ever heard of financial planning or financial planners. The notion of saving for college was something you talked about in high school. We went to elementary school PTA groups and said, we need to teach you young parents with 5 and 10-year-olds about the need for saving for college. They didn't get it because, again, you dealt with this as a senior in high school. So we began by doing these educational seminars. Word got around, I got invited onto the radio. And that interview went really, really well. They invited me back and back and back, and eventually offered me my own show. I was generating more phone calls to the station than any guest they'd ever had. And I got my own show. That was 30 years ago. And my radio show has been ever since. I'm the longest running national personal finance talk show in the country. Talkers Magazine has ranked me one of the 100 most important radio talk show hosts in the nation. They've given me that ranking 6 times. And radio, people said, Rick, I want to learn more. What book can I read? And I was like, all the books on personal finance are terrible. I can't recommend them. So I had to write my own. So The Truth About Money was published in 1997. It was an instant #1 bestseller, stayed a #1 for, I think, 50 weeks and was a bestseller for 71 weeks, shattered all kinds of publishing records, and is still considered the basic primer for personal finance. And that led to my second book and more. I'm now about to release my number 11 book called The Truth About Crypto that we'll talk about. Along the way, we've written a children's book called The Squirrel Manifesto, teaching children 4 to 8 about money. It's never too early to teach children about money. And that led to television. So I've been hosting TV shows for decades, most recently a series of specials for public television. And we've won a lot of awards for our TV work. And I've published a 16-page newsletter for 25 years, and on and on and on. So it's all about mass market, mass media. Reach out to the masses as best we can with this content, education, information, because we know, Dylan, we're not taught this stuff in schools. Nobody goes in K through 12 gets a class on money. College kids graduate with never taking a personal finance class. Mom and dad never taught us a thing about money. Our employers don't tell us about money. So the only way we learn about money is through our own experience, and that means we make a lot of mistakes. And that's an expensive, slow way to learn. And our attitude is, let's teach people this stuff. It's not complicated. It's not hard. Anyone can do it. You just got to be shown how. And that's what we're all about. And so with that education, it attracted a lot of people to our firm. And our company, our little financial planning firm with just Gene and me in 1986, today, Edelman Financial Engines is the largest financial planning firm in the country. We manage about $300 billion for 1.4 million U.S. households. And it's been exciting. I've been named the number one financial planner in the country 3 times by Barron's. I'm in the Research Magazine Hall of Fame. I'm ranked by pretty much everybody in the business as one of the most impactful and transformative figures in the field of personal finance.
Yeah, I've got a cheeky question for you, if I
Sure.
may. How's your relationship with Dave Ramsey? Is there a good rivalry there?
No, not at all. In fact, we're business partners with Dave Ramsey.
Oh, no kidding.
Edelman
Right
Financial
on.
Engines.
Oh, wow.
Dave, we're rivals on radio, of course. He's one of the top radio talk show hosts, and I'm a big talk show host, and we're both building audiences. The difference between Dave Ramsey and me is that we speak to very different audiences. Dave's audience are people who are broke, severely in debt, a mess financially in their lives. And he's trying to help them get out of debt, build up their lives, cut up the credit cards, all that kind of good stuff. My audience tends to be more affluent, people who have some money to invest or aspire to, and they're struggling as a middle-class American family or upper middle class to, how do I pay for college? How do I get pay for the wedding? How do I buy a house? How do I help my aging parents? How do I prepare for my own retirement? It's different kinds of questions and issues. So Dave and I are both out there educating, helping improve financial literacy. We're serving different audiences.
Gotcha. Well, let's use that to transition a little bit more directly into talking about crypto here, because when your audience is people who have a little bit of money to spend or to invest, and one of the first things they might think about investing in the year 2021, soon to be 2022, is cryptocurrency. Right. So to put that to a question, is that foolish? Or is crypto part of a well-rounded portfolio? If so, how much? How do you begin slicing the crypto conversation when you talk about this stuff?
Yeah, I think it's essential that you invest in digital assets. And it might be helpful to look at my journey down that rabbit hole, because that's weird, for somebody like me, a prominent financial planner running one of the biggest firms in the nation, walking away from that company. At the end of 2021, my wife and I are leaving Edelman Financial Engines after 36 years. We are, I'm still going to be on the board. I'm still their biggest individual shareholder, but I'm out of the day-to-day, no longer involved in the company's activities. And we are embarking on this, the Digital Assets Council of Financial Professionals, and my new media company that I'm launching January 1st with a new radio show, new subscription newsletter, podcast and video cast, my new book on crypto called The Truth About Crypto, coming out in May. Why would I, as a Wall Street titan, in the financial services industry walk away from that to focus on digital assets. I was first introduced to Bitcoin in 2012. And like everybody else's first introduction, it's like, huh? What? It makes no sense. Don't get
Magic
it.
internet money.
But where most people initially dismissed it, ignored it, thought if it's not a fad, it's a fraud, it's something to avoid, stay away from. That's the kind of knee-jerk reaction you get from financial professionals. I decided, and commensurate with the way that I have always worked in this field, intellectually curious. What is this? How does it work? What's it all about? Why should I care? And so I have spent the last 8-9 years through this journey, and I reached two conclusions. First, Dylan, digital assets, blockchain technology, and the coins, tokens that it fosters is the most revolutionary and impactful technological innovation for global commerce since the invention of the internet itself. It's pretty hard to overstate the significance and importance of this. Second, the overwhelming majority of financial professionals, forget about ordinary consumers, the vast majority of professionals don't understand that fact. And as a result, they're not generally engaging with their audience and their clients and their investors. They're not generally recommending digital assets because they don't know it themselves. They don't know it any better than their clients do. So the reason I created dakfp 4 years ago was to provide an educational resource for the financial community, financial advisors, investment managers, their firms, to help them understand this new technology, to understand its role in commerce, and to help them realize how you can incorporate it into a portfolio along with the other asset classes. And we're the bridge connecting the crypto community to the investment community. And it's now the huge demand for this because we're the only ones providing this level of service in an educational environment.
Gotcha. Are there any names that come to mind when you look at people from the legacy finance world that seem to really get crypto? Like off the top of my head, Mike Novogratz.
I was going to mention Michael first off.
Sure. Cool. Tim Draper is another one that comes to mind. Who else in your stratosphere seems to get it a little bit? Who doesn't need your help?
Yeah,
Rick?
well, I mean, Mike Novogratz, who was the CEO of Fortress, one of the biggest private equity firms in the country, leaving to start Galaxy and creating a massive crypto company. You've got Mark Yusko of Morgan Creek Capital, who was a classic
previous interview guest on this show. I love talking
Mark's
to Mark.
wonderful, and he is another one. Anthony Scaramucci, the CEO and founder of Skybridge Capital, $7 billion hedge fund, now making a huge push into investments in digital assets. And Michael Saylor. Michael is the CEO of MicroStrategy. He now owns $8 billion worth of Bitcoin as part of his corporate treasuries. His company, MicroStrategy, one of the top business informational service companies in the world, the stock is now tracked as though it's a Bitcoin stock. So there are quite a large number. The CEO of Mass Mutual, one of the biggest, oldest, most staid, dull and boring insurance companies. The CEO of Mass Mutual is now on the board of NYDIG, and they've invested $100 million into Bitcoin. So there's increasingly a lot of folks making the shift, recognizing that whereas traditional Wall Street investors are looking at 5 or 7% returns, in the crypto world, you're looking at 5 or 7x returns.
Let me throw this Michael Saylor line at you. He's said this a few times throughout various interviews about how his interest in Bitcoin has nothing to do with trading or making some quick profit by selling. He's repeatedly characterized it as a technology play. Does that resonate with you? Do you agree or disagree? How, if you were Michael Saylor, would you do the same thing after acquiring $8 billion worth of Bitcoin? Just sit on it?
I definitely agree with the sitting on it part. I do not subscribe, never have, to the notion of market timing. And in fact, that's the majority of Bitcoin holders. The average holding period of Bitcoin is 1.2 years. The average holding period for stocks is 4.5 months. So people are more likely to hold Bitcoin longer than they hold stocks, which is a good sign because we know the incredible volatility of Bitcoin. Some people try to exploit that by buying and selling when based on their predictions. Very few people are successful market timers. You're much better off long term. And Michael's thesis, as is the case with most folks in this space, are looking at the next 5 years, 10 years, recognizing that the likelihood of Bitcoin having a dramatically higher value is significant. I don't know what Bitcoin will do tomorrow, but I'm pretty confident that in 4 or 5 years it's going to be dramatically higher than it is today, even though there may well be several crashes along the way, because that's an inherent nature of this asset class so far. So Michael's premise of long-term makes sense. His notion that this is a technology is equally valid. And that's the point. This isn't about Bitcoin. It's about the blockchain. Blockchain technology is what is so revolutionary. JP Morgan came out with a study earlier this month saying that banks are going to save $120 billion a year by using blockchain technology. Every government on the planet is developing a CBDC, a central bank digital currency, as they recognize the dramatic benefits of taking paper money, which is stupid, antiquated. Name any business in the world that is still operating on paper, by converting dollars on paper into digital dollars. This way, it is cheaper, it is safer, it is faster, it is more transparent, and best of all, as far as governments are concerned, it's traceable, meaning digital money leaves a digital footprint, and this is why the FBI and law enforcement love it, why the IRS loves it. It shuts down tax evaders, drug cartels, rogue nations, terrorist financing. What's not to love? So as a technology, Michael's onto something. But should he be 100% Bitcoin 100% of the time with no room for Ethereum or DeFi or anything else? Well, Michael is, I think, to some degree making a point. And his point's not invalid. Bitcoin is the market leader. It's the biggest. It's the oldest. It's 50% market share. It's going to be the last man standing if this whole thing does blow up. You're directionally correct buying Bitcoin. You might not have the greatest percentage growth compared to some other coins that are newly emerging, but you're directionally correct. You don't have to worry about being precisely wrong. And I think to a large degree, that's his point.
So not all of us are Michael Saylor. Not all of us have a fortune that we can throw into crypto. Not all of us have a publicly traded company that we can leverage to take on debt to buy more Bitcoin. For the person who does have some savings, for the person who does have a rainy day fund, how do you think about slicing that up for investment into crypto?
Well,
You already mentioned Bitcoin and Ethereum. It sounds like you're talking about it. You got to think beyond just Bitcoin. I'm guessing.
I'm going to give you a couple of answers, Dylan, and this is like the key question for investors: is what do I buy? Assuming I've jumped into that rabbit hole and I'm going to engage, what do I buy, and how much of it do I buy? Let me answer the how much first, and then we can get into the what. So you've got your investment portfolio, whatever that is, whether it's $1,000 or $100 million. I'm the guy who started in 2015 with what is now referred to as Ric Edelman's 1% asset allocation strategy, just 1%. Now that seems ridiculously small for someone as optimistic, bullish, and a participant in this space as me, and for a lot of folks who are excited about this space. Why only 1% if you're so bullish? Here's why. 2 reasons. First, recognize that for the most part, I'm talking to financial professionals, advisors who are not yet knowledgeable or engaged. They're fearful that they might tell a client to buy Bitcoin and Bitcoin crashes. They're not merely worried about the client losing money, they're equally worried that they'll lose the client and it'll hurt their business. So they don't want to take a big risk. On the other hand, simultaneously, advisors are very experienced, skilled in managing money. And we know through our training, our experience, if you're going to manage money, if you're going to invest in something, your investment must be material. In other words, there's no advisor anywhere who would tell a client, buy 1 share of Amazon. And what would be the point? It wouldn't have an impact on your portfolio. 1 share? That's silly. If you're going to invest in stocks, you better make it meaningful. And this is why you routinely find 60% allocations. A classic 60-40 portfolio, 60% stocks, 40% bonds. Putting $5 into stocks isn't going to make any difference in your life. But advisors looking at digital assets, they don't want to put 50% of their money into Bitcoin. That's way too risky, way too scary. They don't want to do 40 or 30 or even 20. And their attitude is, if I'm not going to put a big percentage of money into this, I might as well do zero. And so my goal is to get them off zero, to say, look, just put a toe in the water, just test it out, 1%. Now, here's the good news. Historically, if you look at the price history of Bitcoin and other digital assets, a 1% asset allocation is enough to have a material impact on the portfolio because the returns are triple digit in many years.
If 1% goes to zero, it's not that big a deal, but 1% could just as easily become 10%.
Exactly. And for that reason, you can improve the return, but if it blows up, so what? The client earned 6% instead of 7%. So it's a way for people to get started in a safe, relatively safe, or at least a comfortable way without staying awake at night, staring at the ceiling, worrying about your portfolio. So that's why I say just 1%. For people who are new at this, unfamiliar, just getting started, 1%, call it a day. As you learn more, you get more into it, more understanding, sure, you can ratchet that up if you wish. The asset will probably rise better and faster than other assets. It'll grow as a bigger part of your pie just because of its growth. Anthony Scaramucci talks about this. He invested into Bitcoin only 5% of his hedge fund, but it's now 20% of the portfolio because it has outperformed everything else. So that's likely to happen too.
Yeah, interesting and exciting stuff.
Now, the real issue that you asked is, what do you put the money in? What do you invest in?
Yeah.
So I'll give you 3 answers. Again, I'm talking to people relatively new at this. First answer, just buy Bitcoin, be Michael Saylor, buy Bitcoin, call it a day. Number 2, buy a combination of Bitcoin and Ethereum. Be Coke and Pepsi. Between the two of them, you've got 80% of the market. You've got the 2 market leaders. You've got dumb money and smart money. Bitcoin is money that moves as soon as you hit the enter button. Ethereum is smart money, smart contracts, programmable money, meaning you only get the money under certain conditions, meaning when you do something for me. So it works as a legal contract online and is very, very valuable in commerce. That's why I'm more excited about Ethereum than Bitcoin. So buy the 2 of them. Third choice, if you would like to also be more diversified, I'm a big fan of diversification as an advisor. If you want to be more diversified, owning beyond Coke and Pepsi, then buy the Bitwise 10 Crypto Index Fund, BITW. I'm an investor in Bitwise, disclosure. Bitwise Top 10 Crypto Index Fund is the top 10 by market cap coins in the industry. Bitcoin and Ethereum are 80% of the fund. The other 8 coins are smaller, newer coins that are potentially growing faster, but you'll own the top 10 out of the 10,000 that exist. You'll own the top 10 by market share. And this way, you're far more diversified, letting Bitwise handle the buying, the rebalancing for you. You don't have to worry, what do I buy? When do I buy it? Let them handle it for you. So those are my 3 choices for people just getting started. Bitcoin, Bitcoin plus Ethereum, or BITW, which is the top 10 of crypto.
Gotcha. Rick, one last question for you before we hang this thing up. Who would you love to have join your organization, dakfp? Who is not yet a member that you want to make a member?
We're working hard with the financial advisory community, and we work with a lot of Wall Street firms and a lot of the crypto companies putting this all together. And in fact, your viewers can get 2 big benefits from us at dakfp. One is our yellow pages. If you're looking for the companies that are offering products or services like tracking services, news services, tax advisors who can help you with this. We've got dozens of categories of companies in the crypto space, and the yellow pages are free. So you can get it all at dakfp.com. for the DAC-FP Yellow Pages. And if you're looking for a financial advisor who can help you, we offer the Advisor Directory, which is launching on January 1, and it's a ranking, a listing of advisors across the country, hundreds of them, who are knowledgeable about digital assets and can help you figure out, should you invest, how much, what should you buy, etc. And that directory is also free at DAC-FP for our Advisor Directory. So our goal, when you say, who would I love to be immersed with this? Anybody and everybody in the financial services industry and the crypto industry who is working hard to bring really cool products and services to consumers and investors. We're here to help all of you. And that's our job and mission at DAC-FP.
Right on. Our guest today has been Mr. Ric Edelman. Ric is a financial planner, advisor, media entrepreneur, and author of his soon-to-come 11th book titled The Truth About Crypto. It comes out in May next year. Ric, thanks for sharing a little time and expertise with us today. Really appreciate it.
It's been a pleasure, Dylan. Thank you.